Huobi or not Huobi? That is the question. Anyway, real talk. It probably is a question us retail investors should be worried about. Regulation, regulation, regulation. We come back to it time and again, but honestly, how can we not? Rules are currently vague everywhere, and crypto companies seem to be struggling. Lord knows we all are. Are they trying to play by the rules though? Well, that's really a key issue we're going to try and dig into a little bit in this episode by taking a look at what is happening to Huobi right now. Asia is the focus for a lot of this push and pull between regulators and crypto firms. So what's so special about crypto in the region? Why can't the US as well just get its act together and tell the rest of the world what to do with the sector? Honestly, it's going to be a while for that, isn't it? We're also taking a closer look at the crypto landscape in Singapore. Make sure you pay attention to that. It's going to be a couple of big months for crypto there. Some of the most important voices in the space are having vital conversations ahead of events like Phil Singapore 2022. So we've got the lowdown on that. Let's get into it all right now. So let's talk about Huobi Global, because what's happening to it in Malaysia could have big implications for the whole of crypto, especially in Asia. Have you heard of Huobi? Well, if you haven't, it was founded in 2013. It moved into Bitcoin trading pretty quickly after that. According to CoinMarketCap, some $600 million was being traded in it as of August the 24th. That makes it about the 9th largest exchange globally by volume. And it, like a lot of other exchanges, has got big problems with regulators. It's just been added to Malaysia's investor alert list. Malaysia's Security Commission has said it's been operating without official registration. Huobi told Forkast they are currently in discussions with Malaysia's regulatory authorities regarding their presence in the local Malaysian market. They went on to say, Huobi pledges to comply with the local laws and regulations of every country and region it operates in. Compliance is a key pillar of its business, and it strives to adhere to this principle. So should we be surprised at Malaysia's move or not? Well, Huobi Global has a bit of previous here. It's basically been banned in the country where it was founded, which is China, since Beijing declared all crypto trading illegal last year, a fairly large event you might have heard of. But it's been kicked out of other places as well. According to its user agreement, services are restricted entirely in the US, in Canada, in Japan, and in the UK. Just this month, Huobi said it was suspending derivatives trading in New Zealand as well. In July, it also had to close its crypto trading services platform in Thailand after its license was revoked there. So that is a long list of headaches for Huobi, and that could be one reason why its founder, Leon Lee, is reportedly considering selling his stake in the company. Bloomberg said that could potentially still value Huobi at up to $3 billion. Huobi has an affiliate company, Huobi Technology, which is listed in Hong Kong as well. Those shares are down about 50% in the first 8 months of 2022. Meanwhile, its token, HT, is down by about the same amount over the same period. So very clearly investor sentiment not really looking positive. Huobi is not the only one facing problems with regulators though, especially in Asia. Binance had a separate entity in Singapore, for instance, to deal with local rules, but it had to pull its application to operate an exchange in December last year before ultimately closing completely in February. South Korea, meanwhile, has just banned 16 foreign entities who were apparently targeting local customers without being registered with authorities. So does Asia have an exchange problem? Does it have a crypto problem? Does it have a regulation problem? Or does it have both? And are those even unique to Asia? Let's talk to attorney Rafael Padilla, who's the co-founder of Block Devs Asia, and joins us now to hopefully shed some light on all of this. Rafael, what is Huobi's problem in Asia, and how unique are those problems?
First, I think there is indeed a problem. It has to be acknowledged. It has something to do with the requirement to comply with certain regulations for some of the virtual asset service providers if they are considered as offering their services in capital markets. And the problem is not unique. This is not only Huobi's problem, it is also the same problem experienced by other offshore exchanges. There seems to be a clearer consensus now among regulators that some of the activities of digital asset exchanges could be considered as a regulated exchange activity, and depending on the law of a particular jurisdiction, then it might be subject to a registration requirement. And such is indeed the case in Malaysia, where in 2019 they had a law that actually requires the registration of digital asset exchanges with the Securities Commission of Malaysia. Maybe there will be a different framework in other jurisdictions like Philippines, Singapore, and Thailand, Hong Kong. And each of these markets will need to be considered in the regulatory and compliance roadmap of offshore exchanges.
Yeah, look, Huobi's been banned in a list of countries. We've just mentioned quite a number of them. It seems to suggest, though, that some operations might not be banned in similar places. Are there ways that crypto exchanges could or even should be trying to get round regulators and rules in some of these locations?
There is a certain aspect of this that is similar to a square peg being inserted in a round hole. I'm talking about traditional, conventional securities regulation that in theory applies to any other any trading platform, whether it uses technology to provide a traditional service. But at the same time, existing rules fail to acknowledge that there are some unique features and aspects of crypto asset trading platforms, for instance, that have not been considered in these regulations.
So then, is this an issue of crypto companies like Huobi trying to avoid playing by the rules, or are regulators not necessarily being clear about exactly what these rules are?
As a legal advisor myself, I don't necessarily see it as something wrong to navigate regulatory cracks, and if it's something that will make the operation in the business efficient, then why not do that, as long as they're not breaking the law. Now, some products, they offer many products and services, and the reason why we see some grayness is because some of the products are actually not clearly regulated yet by existing laws, while some products are. If you include that product in your platform, then there's some aspects of your products that are regulated, and there are also some products that are not yet regulated. And so I think it will be a useful strategy for many of these offshore exchanges, depending on the markets that they touch, that they exclude or basically exclude or block some products to allow them to legally comply with the local regulations.
And everyone's waiting for the US to decide as well, right?
That's true. The US Securities and Exchange Commission, in practical terms, for practical purposes, is being considered as a model. The enforcement actions taken by the US Securities and Exchange Commission are somehow inspire also similar approaches, similar attitudes, similar policies in other countries. In addition to this, aside from the actions of the securities regulator, which is just an administrative agency, there is also, and we're constantly monitoring that, legal developments, changes in the law in the United States, which could also influence the policy in other jurisdictions.
All right, thanks for that, Rafael. Attorney Rafael Padilla there for us from BlockDevs Asia. Now, Singapore's crypto landscape is under the microscope. Key summits, including Asia Crypto Week and Phil Singapore 2022, taking place there next month. Regulation there and elsewhere in Asia are going to be key areas of focus for those discussions. Forkast Nikita Koirala has this lowdown on what's currently happening in crypto in the Lion City.
Singapore, it's the land where millions of economic dreams have come true, and it's now one of the biggest crypto hubs across the globe. But the city-state is no wild, wild west. Authorities here insist they want to foster innovation with responsibility. During his speech for the 2022 .0 Forum, Deputy Prime Minister Heng Swee Keat called Web3, blockchains, and NFTs a new wave of technology that are not well understood or defined, but have the potential to be game changers. And according to the largest bank in the Lion City, its financial regulators are grounded in the reality while creating a system of tomorrow.
I think Singapore is right in the center. If you read the pronouncements of the government as well as the regulator, they've been pragmatic. They want to be a hub for blockchain for sure. They want to be a hub for central bank digital currency thinking, particularly in the wholesale side. They've experimented a lot with other forms of retail, though they've said they're going to watch it. They're not going to lead with that. But they're leading a lot of the stuff on wholesale, CBDC, settlement engines, etc. So they clearly want to be there.
Well, the Monetary Authority of Singapore, or MAS, has made it quite clear that crypto trading is not meant for the ordinary person, as it clamped down on crypto ads in newspapers, magazines, and social media earlier this year. But this hasn't dampened crypto firms from pushing ahead. The MAS says it has received more than 170 applications for digital payment token licenses since last July. According to media reports, to date, only 14 companies ranging from crypto exchanges to payment solution providers have been granted either an in-principle approval, or IPA, or a major payment institution license, also known as MPI, to set up business in the city-state. Even a giant like Binance, the world's biggest crypto exchange, had to rethink its strategy and end up withdrawing its license application in the country as it couldn't meet the regulatory requirements per reports, while many others have had their applications turned down. That caution became even more understandable given the recent market moves. $2 trillion worth of market capitalization has been wiped out from the digital currency since its peak in November 2021. The juggernaut that started with the Terra crash has led to crypto exchanges halting withdrawals and hedge funds closing shop, sending the market into a tailspin. And Singapore was home to quite a few of the crypto firms that found themselves in trouble, including Three Arrows Capital and Hodlnaut. The latter, in fact, had received in-principle approval by the MAS to provide crypto services just a few months ago. Despite the crypto chill, those that have remained in Singapore welcome the regulation and the caution.
We fully appreciate regulators' mission to protect customers from risk that they may not understand. So this is something that comes with an engagement with regulators in Singapore or elsewhere to explain and find ways to educate customers better. So there is ways to distribute and market the products that are available. It's a journey, and it's important to respect that each country has different approach to it, and they have good reasons for making those decisions.
And not only crypto giants, but the city's de facto sovereign wealth fund, Temasek, is gung-ho on the future of digital currencies and the potential upside offered by crypto investments.
In a sense, Web3 has now become the term which is being used more commonly, but really we see this as an iteration of the internet where a move away from very centralized business models. We don't want to be head in the sand just in the few ideas that we believe in and are executing against, but we are able to see now a very wide range of interesting opportunities. In fact, I think the key thing for us from here is how do we prioritize our time? Because in this space, you could almost be like a kid in a candy store.
While innovation is high on the agenda, so is keeping the common man and woman and their investments safe.
Singapore, at the same time, is quite conscious of the other part of the spectrum, the suitability agenda. And Singapore is always very careful about putting the man on the street at risk, and about the AML KYC agenda. And therefore, if you look at the pronouncements, they talk on both sides of the camp. They want to be a big center, but they want to do it in a controlled way.
As Singapore tries to strike a balance between being a global crypto hub, fostering innovation, and keeping investors safe, the question at this point is, where do we go from here?
I also think that Singapore shapes the regulation for the region, right? So Singapore has always been out in front from a regulatory perspective. Every time that we engage with other regulators, they kind of ask us, what is Singapore doing? And from my perspective, it's always great to be on the forefront of that regulation and being able to shape regulation that was going to impact the region.
All eyes certainly are on Singapore as it leads the way in blockchain innovation and regulation. For Forkast, I'm Nikita Koirala.
Well, for all the latest blockchain news and developments in the Lion City, make sure that you attend Phil Singapore 22 Summit. That kicks off September 26th, right here in Forkast's backyard. And finally, a reminder that Forkast's next Crypto Rising live stream event is nearly upon us as well. That's taking place at 9 p.m. Eastern, August 25th, 9 a.m. Hong Kong time, August the 26th. Some of crypto's most influential figures across Asia will be sitting down with Forkast Editor-in-Chief Angie Lau, as well as Sean Lee from the Crypto Council for Innovation. They're going to be talking about how to navigate the new regulatory landscape, all relevant stuff for what we've been talking about today. That is it from us though. Like and subscribe to this video for more content like it, and let us know your thoughts on what's happening in regulation in Asia and beyond in the comments.